Hey traders and investors, it's Serge Berger here. The number one trick that you can do to dramatically and instantly increase your profitability year in and year out actually is not a trick at all. It's called placing a stop. Guys, there's a lot of folks out there arguing against using stops, but I'll tell you after 15 years of doing this professionally, using a stop is the number one thing that dramatically improved my profitability literally overnight once I had the system mapped out for myself that I actually managed to stick with placing stops every single time when I enter a trade, automatically place a stop. I automatically eliminated 95% of the emotional battle that we as traders and human beings fight when we enter a risk position. So I have a chart of Facebook here. It's just a current example, so I figured I would show you this one. Right now, today when I'm recording this, the stock actually the day before bounced into this lateral support area. Okay, in this case it's around $58.50. Doesn't matter what the level is. Happens to be a technically fairly good area to uh, to potentially limit your risk if you want to go long for a bounce. Lateral support and the rising 100-day moving average, this blue line, are coming in here on this level. If you were to go long this stock and not place a stop, what do you think will happen if the stock starts running down, getting close, if not breaking through the 100-day moving average? I would argue for most people, 6 out of 10 times, if not more, they will not have the ability, the mental ability to actually stop themselves out here at this level. Much less so, and that's even considering they're at the computer. A lot of folks don't even trade full time. Swing trading gives you that flexibility of not having to be in front of your computer full time. You can be literally just doing this for 1 or 2 hours during the day and set some trades. So if you don't place a stop, you're not only playing with fire in terms of your not being able to control your emotions, but B, you can't even leave the computer. Realistically speaking, if you believe a stock's going to do something and you're so certain that it's going to do something that you don't have to put a stop, then that's exactly your problem. You are believing in certainty, or you think there is certainty in the market. There is no certainty in the markets. Okay, if you believe firmly and unconditionally that every single trade or risk position you get on, whether it's investment or a trade or whatever, if you believe there's an uncertain outcome, anything can happen, then there's no rational reasons for you not to place a stop. And you know what? A lot of people think that that's then, if you place a stop, you're then doomed to that maximum loss if the stock goes against you. That's not true. You can always stop yourself out before that. Okay? So if you place a stop, in the case of Facebook, you place a stop somewhere at 58 bucks, just my own example, which is the bottom of the previous day's low, and the 100 moving average, all that stuff coming together. If you have a stop there at 58 bucks, go away, go play some golf, go whatever you need to do, come back. If the stock hasn't stopped out and starts looking bad, so that you want to stop yourself out, stop yourself out. Doesn't mean you have to take that maximum loss, it's just there for protection. So I hope this makes sense to you. Any questions, please let me know. You can shoot me a tweet at my Twitter handle, which is SteadyTrader. Take care.